Welcome back, everyone. Michael here with Offshore Citizen. We had a few days of tech troubles while traveling, so missed a couple videos, unfortunately, so we're going to try and make it up over the next little while. I did, however, record an interesting set of interviews for you, which are coming up, and some other ones also coming up, so hopefully those will be interesting to you. Today, we're going to quickly cover the subject of how to set yourself up for what I would call residency freedom. What do I mean by this? What I mean is a lot of people end up in a situation where their set of options that is available to them is based on which residency programs they can qualify for, okay? And part of that is a function of how we've set our lives up over the previous period of time. So we're going to talk today about things that you can be doing today that will kind of optimize your freedom in terms of your ability to be set up in the future and give you the most possible options. Obviously, given time, you can work on any specific one, but this will give you the plethora of available opportunities. And for the most part, some of them are really extreme, etc., that probably won't consider. But for most residency programs, there's a fairly small set of things that you can have that can be helpful for you, that cost relatively little, take relatively little, and if you're somebody who is concerned about how to live in the most countries possible, how to get the most residencies, I guess that's probably a good way to think of it, then this is something to think about. So let's dive in. Before we do, if you haven't already, please hit the subscribe button, hit the notification bell. If you're interested in the subjects we talk about here, go and reach out on our website, offshorecitizen.net or offshorecapitalist.com, or send a message through our websites to book a call with me at calendly.com/Michael-Rosmer, link in the description below. And this is for getting residency permits, forming companies, opening bank accounts, international tax optimization, asset protection, etc. Okay, so normally when you're going to qualify for a residency program, there is some criteria that qualifies you, okay? And so what would some examples of this be? Well, sometimes there's an income requirement. Sometimes there's a certain asset requirement. Sometimes there's a business requirement. Sometimes there's a certain type of income requirement. Sometimes there's an investment requirement. Now, I'm going to set aside the actual big investments. So for example, you could invest €1 million to get residency in Ireland. That's a pretty large investment, right? So for a lot of people, they're not going to sit around with €1 million saying, hey, listen, maybe I want to take advantage of that. But some of these others are pretty easy to do and actually can have spin-off benefits. So just in general, some ways that you should probably set your life up is, number one, having a business. Okay, almost anybody in almost any circumstance can benefit from having a business because it can allow you to do write-offs and claim back sales tax, whether that's VAT or GST or whatever it is in your particular part of the world. So this is a good thing to have. You'll usually save on taxes locally, and you'll usually end up in a situation where it gives you more flexibility. The reason for this is there's a bunch of countries, such as Bulgaria or Italy, where you don't get a residency permit by forming a company locally, but you can get a residency permit by having a foreign company register in that local country. So that's great, right? If you can show, hey, I've got a business, the business has been operating for a period of time, and it's had money flowing through it, perfect. That's a good starting point. So that's number one. I would recommend that everyone who can have some sort of a business that they're operating, and this literally can cost very little money, right? A few $100 to get set up or to maintain in a lot of countries. Okay, there's a couple countries where it's more expensive. I'm here in Dubai. Dubai companies are expensive. But in most parts of the world, even if you're wanting to say, okay, great, I'll set something up in the UK just so I've got it and I'll run funds through there and I won't have any taxes there, but at least I'll do that. Perfect, that's something, okay? That's number one. Number two, having some cash around. So a lot of people want to be fully invested, etc. And that's great. There is something to be said, and I think just from a general life planning perspective, it's useful to have at least 6 to 12 months reserve fund just in cash sitting all the time. When you go to move to various countries, they will ask you to put up a certain amount of cash or demonstrate a certain amount of cash in a bank. And so being able to show that you've got some cash reserves is helpful. Now, how much is that going to be? Well, it depends on the country. Various different countries have different criteria. But certainly, from just a life planning standpoint, it's probably a good idea to have cash around anyway, and that cash can then be useful for demonstrating for the purposes of residency. What's next? Passive income. So this is probably one of the ones that I most run into with people is people who they've maybe got income, they've maybe got some assets, etc., but they don't have passive income. It's useful if you can demonstrate that you've got some passive income coming in, okay? Again, how much varies by country. I would say that usually very few countries would require more than, say, 3,000 euros a month. There's a lot of places that having up to that level can make a difference. We've got Portugal, we've got Italy, we've got a variety of different other places that having passive income gives you an ability to have flexibility. So how do you get passive income is the question. Well, one way is you can have a company that, we talked about having a company earlier, that pays you dividends, right? That's one form of passive income. Another is maybe you make investments into things that are going to give you cash flow. Now, early on in a person's kind of investing journey, I think it's generally a good idea to build up some additional cash flow, right? Cash flow matters a lot when you don't have it. So getting to the stage where you have a bit of cash flow in your life that is not dependent on you working is a great thing, right? It's always available there. And so usually if you can improve your cash flow on a monthly basis, you basically are decreasing your expenses, increasing your regular income. That's good. And so what are things that you can do there? Well, there's various mortgage investment companies or mortgages that you can invest in that will give you cash flow. Often you have the ability to buy dividend paying stocks. One thing I see, some people will contact me once in a while and they'll say, hey, where can I deposit my money and get a good interest rate? And frankly, mostly in the world today, good interest rates don't really exist. But on top of that, usually in order to get a higher interest rate, you're taking on additional risk. I often tell people, instead of putting your money into a bank and getting interest that way, often you can buy the bank stock. And a great example of this is the Canadian banks. They pay good interest rate or good dividends. Some of the American ones do as well. Okay, you have withholding taxes if you're not a local, etc. But being able to do that, you might earn, say, 5%, especially over time, because they'll tend to increase the dividends over time. So if you bought in at low points, 5% is a reasonable cash flow. You also have some capital appreciation possibility. Is it going to make you rich? No, it's not going to make you rich, but it gives you something, right? Other examples of places where you can do this would be there's other interest-based investments such as bonds, etc., that you can get. So depending on how much capital you have available to tie up, etc., this is something that you can do to show some passive income. You can also sometimes structure a portion of your income to be like royalties-based income. You can look at whether that's an opportunity for you, but any of these scenarios can give you something so you can say, hey, I've got passive income. And then the last example would be real estate, right? You can buy property and you can have rental income. That would also qualify as passive income. So these are reasonable options and frankly can be pretty good, especially if you're in a place where there's good real estate opportunities. Sometimes you can apply leverage to increase that return, etc. These are good, okay? So that's the next thing. The next one is having regular income period. So a lot of people are very cash rich or asset rich rather, and they don't have the cash flow. They say, oh, it's not that big a deal. Maybe I'm fully invested in crypto or something. From the purposes of residency, if you can show that you're making usually up to $5,000 a month is enough, okay? $5,000 a month is probably that, and just say, hey, listen, I have this. Now, there's lots of benefits to this. Banks like it. It can help with getting loans, and it can help with getting residency permits. Now, there may be some tax consequences on it. Realistically, especially as your income grows, if you're paying a small amount of tax on $5,000 a month or 5,000 euros a month or something, it's not that big a deal. You're probably in most places going to pay less than 30%, right? So $1,500. And then from the perspective of showing other tax authorities, you can show them that that's the case as well. Because we have progressive rates, that's why I'm saying 30%, probably on the top end in something like a $5,000 a month income. So that's another piece that is useful. So those would be some of the main things. The other things that are, of course, important, not having a criminal record, that's a big deal. Not being involved in active lawsuits. This is one that can come up sometimes when you're looking at getting citizenship by investment programs, etc., is if you're involved in an active lawsuit. Depending on the nature of the lawsuit, etc., that can be negative. So what are you doing in order to do that? Well, this is where kind of some asset protection planning comes in. Maybe you have a company that you own that provides some barrier to protect you so that the company gets sued rather than you getting sued, right? This sort of thing. Always good things, which again goes back to the company, right? We said, hey, listen, Do you have a company? Well, if you're operating through the company, that can protect your credit and it can protect you from lawsuits, so that can be useful as well. So those are things that I would consider if you want to kind of optimize the maximum number of residency permits that are available to you in terms of how you structure your life, your finances, etc. And if you've got any questions, let me know. Happy to discuss it. Oh, I guess one more that I didn't mention is, don't overstay visas. That's really bad for you. If you're found to be overstaying visas, it can screw up your ability to get visas going elsewhere. So keep it in mind. Anyway, hope it helps. If you have questions, put them in the comments below. I'm going to see you guys on the next video.